Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Scroll through the comments section. Looks like I blew up some people's thing with inflation. Says, as an economics major, I can say you don't get an increase in inflation with money supply growth if you simply replace a lot of deflationary money lost within the same vacuum. Money was printed when jobs was being lost. Money was not being spent and bankruptcy skyrocketing. I know Adam Smith type economics will talk on money supply as inflation, but y'all tend to ignore overall spending. The money supply has been going up for 10 years, and where was the inflation? It was in the stock market and bond market. You think those haven't gone up a lot? So it went there. What I am saying is the money's in the system. It is in stocks. It's in assets. That's why we had asset price inflation. When people are looking at prices of consumer goods, that doesn't necessarily mean that the money went into consumer goods. You can have distortions in the market depending on where that money flows. The money flowed into stocks. That is where the money is. Now, if that money flows out of stocks into something else like commodities, what I'm kind of basically saying is that under those market conditions of an expansion phase of real estate, which we've seen in history every single time, which is a leveraging up, and money likes to rotate from stocks and bonds into commodities, where do you think that's going to head? Where do you think that's going to take inflation? Because that money is in the system. It exists in those assets. We can see it in the ratios. We can see that stocks are expensive to commodities. We can see that stocks are expensive to real estate. We can see that stocks are expensive to absolutely everything you measure it against. Doesn't matter what it is. The money is there. It's undeniably there. We can see it in the ratios. When that unwinds, and what's going to unwind it? Interest rates. Inflation and interest rates. And the inflation will come from the expansionary phase of real estate. New homes, new loans, it's coming all in. That money's going to come in. It's going to put pressure on interest rates to go up. When interest rates start going up, the money's going to rotate out of bonds on over in stocks. We'll see what happens. We'll see what happens in stocks, but most likely stocks will go sideways. They're going to chop sideways in a consolidation period. The charts on a big long-term perspective of all these commodities are massive. We've got these massive consolidation periods between big moves. And I think we've got a massive move coming ahead of us if we go into a large inflationary environment, which I think we are. So the inflation has gone into stocks and those types of assets. Now it's going to be loaned into existence against the real estate market. That money's going to get into the system. And when that money gets into the system, we're going to see price inflation on consumer prices. We're seeing the PPI go up. And I'm going to do a clip for you guys. I'll release it the day after. And you can see how this is all correlated together. And I'm also going to correlate the 10-year yield to the performance of other assets like platinum, oil, and all these other commodities, uranium. And what you're going to see is there's a correlation there. You're going to see that when the 10-year yield goes up and the 10-year yield doing an inverted head and shoulders pattern matches oil, inverted head and shoulders pattern. And when this big old pressure comes of inflation and the interest rates start going up, you're going to see these commodities start to rocket. You're going to see the consumer price index go up. And we're already seeing the PPI, the producer price index, rocketing higher, breaking out of its consolidation pattern. The patterns are there because it's humans interacting with each other. It's the fundamentals. It's what people are seeing and feeling in the world and what they know about these markets. And they're going to react based off of this information. They create these patterns. I am just looking at the patterns. I'm looking at the setups. And I'm looking at the fundamental analysis behind it and the ratios of where money is and isn't. So that's what I'm looking at. And I don't think money velocity has much to do because we've had 6% inflation, undeniably 6% inflation or greater every single year per capita. If you take the money supply and multiply it by velocity and divide it by your per capita basis, it is running at about 6% if you do the math. 6%. That is your inflation rate. I don't care where it goes, somewhere. It may not show up in consumer prices, or maybe it does and they're just lying about it. But it's greater than 6% depending on the years. It's way greater now. It's massive now. It's off the hook to the upside right now. Coming on down, it says Paulson's following your channel. Well, hopefully he's a pretty cool guy. I like his outlook on things, very much so. It says, are gold and silver ETFs also good hedge other than physical? I own iShares gold and silver ETFs. Will these go down with stock market crash even though they track the spot price? Yes, they're fine. I prefer physical. That's just what I do. There's other reasons why I prefer it that I'm not going to talk on the channel about. That's tax-related stuff. So they could be drawn down if everything gets sold off because of the leverage in the system. There could be a deleveraging event for a short period of time, and then we rocket higher in commodities, in my opinion. But there could be a period that I don't necessarily know what will happen. And I think that we've done the first leg of a three-wave move in a very large pattern. So we got the first leg done in Elliott wave. We're having a pullback right now in a lot of these, like copper's pulling back, platinum's pulling back. All these are pulling back, and then you're going to see a big move, and it's going to blow everything out of the water. So it's going to be a really fun move. It's going to be a massive move. Gold, yeah, look in there. If you have too much debt, what they do is they print it away. Yes, but the Federal Reserve doesn't print, it loans. Yeah, but they create money. The Federal Reserve creates money, and the Federal Reserve does print money. The Treasury creates the bond. So they loan the money to the government. The Federal Reserve prints the money, or the currency, I should say. They print the currency, and the money is loaned into existence off of a bond. So it does print money, and there is a loan that happens. That's why Congress is always raising the debt ceiling. That is your bond being loaned into existence, that money that's created. The problem is the design of the system is stupid. It puts you into slavery. And the reason is, I loan you $1, and it gets loaned into existence from a blank checkbook. And the person who does the loaning has to pay $2 back. Well, if you only have $1 loaned into existence, where does the second dollar come from? There you go. That's your problem. There's too much debt in the system because the principal exists and not the interest. You can never pay the interest back. So when you look at all of the countries in the entire world, they're all in debt. It's by design of the system, which means you have to increase your debt continually forever in order to make the system sustainable. In order to sustain the system, you have to increasingly take on debt. Now, you could be very creative and pay this debt back if you really wanted to. You could say, here's a pebble of sand that says is worth $40 trillion, and give them a pebble of sand back and say, you're paid off. If you really wanted to. That's why they had the $1 trillion or $2 trillion coin of platinum. They can do anything they want if they wanted to. Problem is, the government doesn't run this place. The banks do. The banks run all this. And the banks run all this because they're the ones with all the money and credit. And if you have to loan everything into existence and you're the one doing all the loaning from a blank checkbook, what do you think? They got all the power. They have all the power. And what happens if you don't put... Here's my rant on here, all right? Money created from a blank checkbook, in my opinion, is not collateral for a loan against a physical item in the real world. So one could argue, if you look at the entire system and win, and I'm not saying that I have to be verified to win, but this is the correct standpoint in my opinion, is it is illegal to create money from nothing, and that's why in our Constitution we have gold and silver as money, and why it was written in there was to prevent Federal Reserve banking systems to create something from nothing and have loans against real physical items. And what happens there is you get these loans against the items, and if you don't pay the loan back, which by design will default because you don't have enough dollars in the system to pay it all off. So you have to increase this thing massively all the time in order for it to be sustainable at all. But at the end of this, everything will go into default. And where do all those assets in the real world go? They go to the banks. And if they go to the banks, what collateral did they put up for it? A blank checkbook saying, I loaned you $200,000? Where did that $200,000 come from? A blank book, a blank checkbook. It was loaned into existence from the Federal Reserve. Went on the balance sheets of the commercial banks in a fractional reserve lending system. They loan it out and create more money. All of that is not backed by anything. It's fiat currency. Therefore, if one could use any sort of logic, you could say, and people have brought this to court and they've lost because the court system is going to defend the system itself. It doesn't mean the person who brought it to court is wrong. They are right. They didn't put up correct collateral for that loan. Period. Done. They didn't create any commodity. They didn't turn a commodity into a usable product. They created zero value. Zero value at all. So all they did was create this little money, put it in a debit book, and said, here you go, I created a whole bunch of different money. That's a fractional reserve lending system. Now the system has a fractional reserve lending system of a reserve ratio of 0, which means they can create as much money as they want. They'll just print the money to put the reserves back into the banks, to recapitalize the banks. And now they have got loans against all this stuff that they can take from you if you don't pay it back. But everyone has to default at some point, or not everyone, but a lot of people in the system, because there's not enough money to pay the interest payments on the debt. Only the principal exists. So you've got all this debt in the world, which is massive, absolutely massive in relationship to the actual money that can go circulating around. So you're always going to have this dollar shortage if you're the reserve currency, because everyone else, if they print money, has to convert their money into dollars to pay for commodities and oil and other things, which will ultimately create a demand for the dollar. And that's what we're seeing in the milkshake theory. We have these currencies that are getting blown up everywhere: Turkish lira, Myanmar's, Panama, whatever it is else. And they have to have dollars in order to buy whatever they need: oil, other commodities, and whatnot. But if the dollar's inflating, and ultimately what you could say is, if everyone is going towards the dollar, and if the dollar is inflating like heck, then eventually everyone's going to go towards real estate, commodities, precious metals, because that is where the value is going to be stored. That's the only value in the system. The paper currencies are worth nothing. They're fictitious, made up, whatever. A business, if you look at it from a big picture view on just business itself, a business is an empty shell that was created for tax purposes to get sued upon. All right? That's what it basically is. And all it does is churn commodities through it to make a product at the end. And what they're trying to do is increase their cash flows. But if you look back at this whole system, and the way this whole system is derived and sustained is off of the value that is created. And what is the value in the system? It's commodities and products. And that's about it. There could be some services that you could put in there, but that's really it. Everything else steals value from those things. That is it. Because at some point, you're going to need something. If you have a business, you have inputs, you have equipment, you've got energy, you've got all these inputs to create that thing. Now, the financial system, they don't create anything. They just create debt. They create debt. They put no collateral up for your house, and then they can take your house if you don't pay it off. Or they can take a company, or they can take equipment, or they can take everything. Cars, whatever has a loan against it. My question is, what collateral did they put up for it? Is fiat currency the correct collateral? My opinion, no. Reject that currency. Get that thing. A piece of currency is debt. That's why it's called a note. Look at the top of it, a Federal Reserve note. A note is debt. It is a promise to pay something back in the future. What do you pay it with? If your currency is debt and your bonds are debt, and you have all this debt, what's the final payment of that thing that you're trying to get rid of? How do you pay off your debts? Precious metals, real estate, natural resources, and usable products. That's it. Or artwork or some other history or something like that. That is it. There's nothing else out there. I just summed up basically everything of investing there and business. Business is all they're doing is just it's an empty shell that they use for tax purposes to protect themselves so they don't get sued personally, and then they just fling commodities through it with equipment. And those products that people can use, that's value. But what happens if you have a shortage of your inputs? What happens to that company? You either charge more, and if you have a permanent shortage of inputs, that company ceases to exist. Or if the product becomes not favorable in the market, that company ceases to exist. So, I don't know. That's kind of my rant a little bit, I guess. And I am not a bank guy. I do not like banks. So, I buy physical metals and I buy things that are outside of the system. That's what I think protects myself against these paper currencies floating around. And the revaluation occurs during certain market conditions that I have identified in an expansionary phase of real estate in the currency that is the reserve currency. That is the thesis of the channel right there. You can agree with the thesis or you can disagree. The debt will always grow. That is by design of the system. You cannot get away from it. It will always grow, and it will always grow. And what we've seen in history is that almost all of these currencies fail through inflationary measures. They just say, print it and let it go. They just let it go, and it hits a critical mass where things get out of hand. But that debt is in relationship to other currencies. You can't go into hyperinflation. Well, you can. You can't default against other currencies if all of the currencies around the world are inflating like heck, because it's a relative basis. And what that means is that everything is going to get devalued if everyone's doing it everywhere. In some areas, they're going to get to be much worse because they're devaluing faster than everyone else. So, in my opinion, I think that we are entering a period which is going to be inflationary to inflate the debts away. We have too much debt. I agree with that. What are they going to do? Are they just going to give up and say, well, we're just going to let it default? I doubt it. That's not what history is showing us. And when I'll read this here, it says it's just a simple way of explaining it. It's the exact same as someone buying a house right now with record low interest rates, taking out a loan to pay back later with devalued dollars, meaning the debt is cheaper than it has ever been before. Right as inflation is growing stronger by the minute, the Fed is, in real terms, is actually printing money because the assets it's buying is basically worthless. It's really semantics. Yes, you're technically right. The Fed isn't printing money. It's just trading for assets from the banks that are crap. It's a game of hot potato with assets in order to increase the money supply. I do not know if they are going to pay back the national debt with devalued dollars. If you look at history, most countries, I mean almost all countries, default on their debt. They will never be able to pay it back unless they did massive cutbacks, reduced basically everything, and increased interest rates to back breaking rates. But in this environment, all they are doing is expanding debt, and it seems like it isn't slowing down. It's increasing. And that's by design of the system, and they're going to increase and increase and increase and throw all this cash out there and try to devalue the debt. That's what they did in the 40s. So we'll see what happens, guys. I am in the camp that we are in an inflationary environment based off of almost every single chart that I've seen in commodities, producer price index, consumer price index, what the What the Federal Reserve has said itself that they are tapering because inflation is not transitory. They're going to raise rates, is what they say they're going to do. And I wonder why they're going to do that. It's probably because we have inflation. But that's my take. If you guys think I'm wrong, please put it in the comment section. Love to hear you guys' opinion on why you think that. And I do read this stuff. I like responding to it. So thank you for leaving comments. I really appreciate it. And thank you for listening. This is Finding Value.